What's going on, guys? It's Tickers and Tokens here, back with another video. In today's video, guys, I want to talk to you about what the Fed's next move might be in the markets. If you've been following the markets any at all, you know that the Fed has hit us with three back-to-back consecutive 75 basis point rate hikes. Here's this article here today. Stocks soared today, Thursday afternoon, reversing earlier losses after consumer prices rose more than expected in September. The inflation report showed increases in everything from groceries to transportation to household furnishings and sent the U.S. dollar to record levels against the Japanese yen. Here's what else there is to know today. Yeah, stocks ran during market hours. If you weren't paying attention to it, and the market started off down. The Dow Jones was down 2 or 3%. The Nasdaq was down at least 3%. And the S&P, I believe, was down 2 or 3% as well. And we just ended up today, and Nasdaq ended up 3% up by the end of the day. I think that's what they go into here. Yeah, Dow Jones surged 828 points, 2.8%. S&P jumped 2.6%. Nasdaq jumped 2.2. All indexes were deeply in the red earlier, and the Nasdaq down more than 3 at its low of the day. But the S&P 500 Nasdaq had fallen for 6 consecutive trading sessions and had touched new lows for 2022. Then came the big rebound. Yeah, I was actually watching this live. I wasn't recording a video. I just woke up and crawled out of bed. But I'd seen that stocks were down really, really bad. I'm thinking, oh, man, the data's bad. And even before I even seen what the data was, I'd already seen that stocks were just really, really beaten down. And then I'd come to check it, and it was right, a little bit worse than expectations. I mean, we've seen that it was 8.2 versus 8.1 expected, 6.6% core CPI. Overall, consumer prices were up about 0.4%. It was just bad news across the board. It just didn't really look good. I'm going to take a look here. So, what is the next move for the Fed then, if this is the case? By the numbers, the headline CPI came in at 8.2%. Yep. Down a smidge compared to August, but modestly higher than expected. It was the core CPI came in 6.6, much hotter than expected, and up compared to August. Yeah, that's what really hurt us. Early today, expectations for a November meeting called for 75 basis points with 84% probability. But as of this time of this article right here from thestreet.com, it's at around 97%. I'd say we're guaranteed at least 75, at least. This is actually going to be a historic moment. This is going to be the first time we've ever had 4 consecutive 75 basis point rate hikes, if I'm not mistaken. This will be the very first time. So we got a very aggressive Fed, if that doesn't tell you anything. A lot of us out here thinking, me included, I think they're going to overdo it. I think they're going to push us into a real bad recession, and it's going to be bad. It's going to be really, really bad. I'm sorry. I know I'm sniffling a lot and tired, y'all. I just got off work, and like I said, I got up early. I'm sleepy. You just got to bear with me on this one. I'm trying my best today. But again, the message is rather clear. The Fed is likely to do more in the coming months than previously expected because we've been sharing with members inflation pressures have been persistent. And this inflation has been sticky. It's been sticky. It's like when you eat a Rice Krispie treat with your bare hands. You can't get it off. The prices of Rice Krispies have gone up too, if you hadn't noticed. We were just going grocery shopping, and I think I told you this story earlier. We ended with 2 bags of groceries, and it being $100. Oh man! And one thing I didn't touch on here yet was that the car market is just insane. Car insurance, used cars, new cars, car loans, you name it, man. It's all crazy. Me and the girlfriend recently just took out $1,000 just trying to get us a nice used car to replace the one I'm sitting in right now, and just I don't know. You can't find one for $1,000. It's just you used to be able to find at least something, any kind of old beater for at least a couple hundred around here, and if you looked in the right places. But now Even the old like 90s models and 80s models cars are going for like 2, 3, 4, 5, 6,000, 7,000. I've seen 7, 8, 9,000 up there. I'm like, man, those are almost new car prices, man. What is going on with this inflation, man? And you can't help but wonder that to yourself, how do we get ourselves into this mess? Well, we know how. It was the economic stimulus that got us out of the recession we should have had during COVID. And now we're paying for it in full. We're getting 2 years worth of pain and condensed into 1 year. It feels like. So it's rough. But if you look at here, they're saying S&P 500 is below the 3,600 level, and the next level to watch is the 3,300. I actually do believe 3,300. Not only is it the next support, I think it will most likely end up being the bottom. Not financial advice. I mean, do your own research, but that's a really strong key support, that 3,000 to like 3,300 level. And if we break that, it's free fall, man. It could go all the way down to like 27, 2,600. We're just going to be in the basement because you're going to see SPY have pretty much erased half its value since its all-time high. And those are rare situations you actually get the S&P down almost 50%. That's 08 recession type situations right there. That's very deep, deep recessions, almost even depressions, I'd be venturing out to say. But yeah, you notice a lot of these articles, everybody's always saying how bearish they are. Everybody's so bearish, so bearish. The sentiment is one of the lowest I've ever seen. If you take a look at the fear and greed index right now, sitting at about 23 right now out of 100, you can see that ranks pretty marginally into the extreme fear range. So if you know the old Warren Buffett quote, you should buy when everybody's fearful, be greedy when others are fearful, I can't even talk right now. I'm sorry, y'all. I'm so tired. Be fearful when others are greedy, and greedy when others are fearful. Right. There we go. I can talk now. So yeah, anytime you see this needle into this section right here, I see that as a good time to buy. And the further you get down this way, the heavier I'd say you want to buy, because stocks don't stay into extreme fear for that long. This is the longest time I've ever seen it stay in extreme fear. This is just, everybody's overwhelmingly bearish. You should take a look at that, the bearish sentiment, because it's just, not only are we in extreme fear, but just overall bearish sentiment is just insane right now. Sorry. Let's take a look. U.S. sentiment. Yeah, here's a report on the jobs report. It's not news. Yeah. Yeah, we have everybody just, I'd say if you're not going to be heavy investing, I'd say keep your money in a savings account, because their interest rates are actually going up on them. Looking at some of them earlier, and almost all the banks, major banks, are over 2% interest rates now for your savings. So, hey, that's that's not too bad, I mean, if you guaranteed a 2% return on your money, I'd say you just go for it. That's hard to argue with. I mean, that's just pretty dang good. All right, let's take a look at that bearish sentiment that I was just talking about. I'm getting not a good internet connection out here. Yeah, if you see it, it's been pretty high just about all year. It's about the height of the market last year. It was down around 24, and it's almost like 2.5 times that now. It got almost triple at one point. Just a few days ago, September 29th, that was about 2 weeks ago now? Dang. It's come back down a little bit, but it's still really high at 54.7%. That's a really deep bearish sentiment right now. And apparently they get their data all the way back to 1987. But yeah, the market's scared, y'all. And you should really be greedy right now. If you want to be a really smart, educated investor, as this is a good time to buy. I know a lot of people will tell you not to buy the dips right now because it's a falling knife and da 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 da. If you are really rich and you already have made most of your wealth in the stock market, it's okay for you to dodge all the risk and all the bearishness and try to go ahead and time the bottom. Which, let's be honest, nobody can really do it. It don't matter how good you think you are, you're not timing the bottom. But if you're new, I'd say if you have anything less than like 5 years of overall stock market investing / trading experience, you need to be buying right now. Again, not financial advice, just my opinion. That's what I'm going to be doing. I've been buying all year. I've been buying heavy through the crash, just DCA, 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 dollar cost average, all the way through the market. Chop up my money, put some here, put some here, put some here. On red days, I throw in a little bit more. On really red days, I'll really throw in some more. Yeah, I mean, of course, I'm down a little bit. I mean, as everybody is if you're going to be buying right now, but it's the price you pay for good returns in the market. No, well, that's all I really want to talk to you guys about today. Just stay on it, guys. It will get better. I promise you, it will get better. Just be patient, stay the course, and most of all, like and subscribe. Like and subscribe. I really want to try to get these videos out more often, and it really mean a lot to me. You guys just like the video. You can follow me on Twitter at Chris Mike Duncan. That's Chris Mike Duncan. You can find me under the same name, Tickers and Tokens. And I have a blog too, tickersandtokens.in. You can follow me there too if you'd like to. Where I do post there. I actually post there more often than I do YouTube videos. So you can find me there. But that's pretty much all I got for you guys this time. This has been Tickers and Tokens, and I will see you in the next video. Peace.